Hi, everyone. I'm Daniel Weisfield.
I'm Yoel Calvin.
We are the two co-founders of Three Pillar Communities, and we are also brothers-in-law, in case you didn't know. I married Yoel's sister 14 years ago. And we're here today to talk about our preferred equity investment opportunity in our Silos project in Bozeman, Montana. Before we get into it, let me just share a couple quick legal disclaimers. This opportunity is an equity investment. You could potentially lose money. It is only open to accredited investors as defined by the SEC. And nothing you will hear in this presentation is investment advice, tax advice, or legal advice. With that, let's talk about the project. So what you are seeing here are real photos from our Cameron Crossing manufactured housing development in Bozeman, Montana. It's gorgeous. Just look at these pictures. You can see this manufactured home here with mountain views on multiple sides. You can see a picture of the kitchen, which has really nice ceramic tile backsplash, farmhouse sink. You can see the kitchen, which has a gas fireplace, a really cool chandelier. This is not what you think of when you think of a quote unquote trailer park. We are turning the trailer park stereotype on its head and developing a really high quality, financially attainable community for working people in Bozeman. And the community is excited about it. So we got a glowing review from the local news who said, Gallatin County hasn't seen anything like this in years. And we showed a little screenshot there of our CRM, our customer relationship management software. We have over 1,000 customer leads who've signed up on our website, wanting to learn more about our houses. We've booked more than 100 in-person sales meetings in our sales center in Bozeman, which are taking place as we speak.
In 1 week.
In 1 week, that's right. 100 meetings in 1 week. Yeah. This is just the first week, and we still haven't done any marketing. So we are seeing intense customer demand to fill up this community. And we're already turning dirt. We've got guys out there with excavators and heavy machinery. We've already built our highway deceleration lane to get off kind of the main road there into our property. And our crew is now working on shared improvements between our tract and the neighboring tracts, including roads, water mains, and sewer mains. And the concept of this offering is we are raising $3.5 million to act as a bridge to pay for these construction costs until we close our construction loan from a bank, which we expect to happen probably in January or February. So, Yoel, you want to talk through kind of the structure of the offering?
Yeah. So what this is a preferred equity offering that functions kind of similarly to a loan. So it delivers a 8% immediate cash yield. That means every quarter we'll be distributing an 8% return. It's liquid. Most of our investments in Three Pillar Communities are illiquid. You can't say, I want your money back. You're in it for as long as we're in it. It's typically long-term. This is an investment that has a 6-month lockout. And then after that, you can call your money and say, have my money back. Within 90 days, you get back to you. And so this is going to, like Daniel said, kick us off for our construction costs. And then people who don't take their money back will use that money for working capital to fund home setups. As we start setting up manufactured homes, that'll also require capital, and it'd be great to have more. So as we said, it's liquid. It's got immediate income. There is, however, no equity upside. You're going to get your money back and your 8% for as long as you're invested. And so there's actually 2 projects. Daniel went into detail on Cameron Crossing, which is a larger property, 50 of the 90 acres that we own there. And it's a manufactured housing community. And then in the southern part of the property, we have Juniper Estates, the single family subdivision of 143 lots. Typically, our equity investments are you call the bottom of the capital stack. They're the last to get paid. But the preferred equity here is actually senior to the common equity. So we put in investors have put in $13 million of equity, and this money sits above that. So in order for this to go to zero, which any equity investment can, the property would have to lose more than $13 million of value, or $16 million of value. We believe we've already created a lot of value. We'll talk about that. So we see this as a lower risk investment with liquidity, like we said. Timely distributions will start in January, and then every quarter after that, the month after calendar quarter end, we pay distributions. And we talked about the redeemability. You can call us and say, hey, I want my money back. We'll give back to you. And overall, the projected IRR here is 8% because you'll continue to get your 8% for as long as you're invested. And there are tax advantages to preferred equity over doing this as a loan, where the distributions are not taxed until all of your capital is returned. And then once all of your capital is returned, any dollars in excess of what you invested are capital gains. And depending on how long that money is invested, those would be considered short-term or long-term capital gains. And long-term capital gains have a lower tax rates typically than the regular ordinary income, which would be taxable income or interest income, sorry.
So just to sum up what you all mentioned, I think the big highlights here are this is an income-focused investment. It's liquid after the first 6 months. You can redeem it, we'll give you your money back. 8% total return on your money, right? You don't have more equity upside beyond that. And this is not tax advice, but we anticipate tax advantages here due to the preferred equity treatment of this investment. Okay. So we can give a little background on the real estate project itself. I'll talk through kind of how we picked Bozeman and some of the background here. So when we decided we wanted to develop new mobile home parks on raw land, we specifically picked Bozeman because it's one of the fastest growing markets in the country when you look at small markets. In 2020, Bozeman's population grew 18.4%. That's an astounding number. Basically, people have been flocking to Bozeman because quality of life is amazing. There's natural beauty. You can ski, you can fly fish, you can mountain bike. You've got a university there. You've got breweries. You've got coffee shops. It's a very desirable place to live. And as you've had that influx of population growth, housing prices have escalated significantly. So the median home price in Bozeman a few years ago was $400,000. It's now more than $700,000. Median home price has almost doubled in roughly 3 or 4 years. And that means lots of folks are priced out, right? These are the local folks: nurses, teachers, cops, firefighters, fly fishing guides, baristas, brewery owners, you name it, who can't afford $700,000 for a home. And you've got folks who just have submitted offer after offer and have not been able to find a place to live. And those are the 1,000+ prospects who've already signed up and are so excited about our property. Literally, I'll share a story here. Our team was at Kinko's in town, Staples, earlier this week, printing some documents for our sales center. And during the course of 20 minutes at Staples, they got stopped by 3 people who oversaw what they were doing, saw their 3 Pillar Communities hats, said, "Oh, are you associated with Cameron Crossing? We want to get on the wait list. We're so interested. We're so excited about buying a brand new home at a $250,000 price point." There's massive need for this product and a lot of excitement. So we picked the market. We raised $13 million in equity. We bought 90 acres from the Dykstra family. They were farmers. We met Mr. Dykstra in Bozeman. He's out there on a tractor, spraying his field when we met him. And just some good pictures of me and Yoel, with the horse on site. And we saw a real opportunity there. It's a great location, closed on the land. And then we spent a lot of time working on entitlements. Entitlements means land use approvals. We did engineering, did design, bought sewer and water rights. Finally went to a vote with the county commissioners about 2 months ago, and we got approved 5 in favor, 0 against. The county was really excited about this project. So Yoel, do you want to then start kind of with construction, what we're doing there?
Sure. So I think Daniel said earlier, we started the construction with shared improvements and a deceleration lane. So there's a total of 5 parcels in the greater Dykstra subdivision. We bought 3 of those parcels. 2 are the single family home. 1 is the manufactured housing. There's 2 neighboring parcels. So together, we are all doing shared improvements that create the infrastructure that will serve our collective property. So first we had a deceleration lane, and now we're building a road that we can drive to get to each of our properties, and the water and sewer mains that are going to connect them. Part of that construction is also starting out the initial phase of both communities. So we're building 25 single family lots and 43 manufactured home lots in that construction as well. And we've kicked off that construction, and the construction should be done, the shared improvements should be done in the next 2 to 3 months. And then we'll start doing earnest kind of improvements on our properties dedicated. from a kind of an off-taker perspective or sales perspective, we launched our website, our pre-order website. We just kind of had a form with like sign up for the wait list. We've captured over 1,000 leads. We launched our full website actually today. And
Is it CameronCrossing.com?
Cameron-crossing.com.
Okay.
Yeah.
Check it out, Cameron-crossing.com.
Yeah. And now we're going to start, once we work through the more than 100 home meetings that we've already booked, and we start to get some breathing space on the sales side, we'll start marketing and generating more leads and building kind of a replicable process to take pre-orders on homes. And so we actually got our first pre-order yesterday, our first reservation, our first day of sales. We had 7 showings, some maybes, some I want to look at it more, 1 yes, no no's, which is very encouraging. And on the construction financing side, like Daniel said, we're working with the lender to get the financing in place that will cover the rest of the cost of development and construction. And this preferred equity is kind of a funding bridge to get us to that point.
Right. So here we can talk through the security that investors in this offering have. So as Yoel mentioned, we've already raised 13 million in equity, and we've spent close to 13 million in cash. You can see that table on the right describes where the cash has gone. You know, we bought the land, we bought water and sewer rights, we've spent money on engineering and professional fees, setting up a sales center. So we've already invested around 13 million. That's the red bar in this chart. And then the green bar shows we think it's worth around $18.5 million today. We think we've created that value by obtaining land use approvals, obtaining water and sewer rights, which are rare, that you can't buy them anymore until the sewer plant expands its capacity. So we think when we sold it today, that's kind of a fair market value estimate. And currently there's no debt on the property. So our $3.5 million in preferred equity, as Yoel mentioned, will sit above the common equity in the capital stack. And you'd have to wipe out all of this value in order to actually put that $3.5 million at risk. Is that a fair summary? This just essentially shows that in a different way. I think we spoke through most of this already.
This slide is a narrative kind of explaining the structure of the preferred equity and kind of the terms that we've kind of outlined already.
Mm-hmm. So let's go through some FAQ. Yoel, I'll be the question asker and you can be the answerer.
Sure.
So Yoel, I'm a investor potentially interested in this offering. How is this different from most 3 Colors offerings?
Yeah, I think there's a couple main differences. So one is liquidity. Typically, our investments are multi-year hold with no easy access to getting out if you're in it for the long term. This is designed to be a short-term investment. People can take their money back after 6 months. They can hold it for longer and continue to earn 8%. That's kind of the main one. And then the other I'd say is from an equity perspective, because it's preferred, it is senior to the common equity. So it's lower risk. And at the same time, there's lower or no equity upside, where the best this investment can perform is 8%. And that's really where we expect it to land.
Okay. So talk me through this very specifically. If I write a check for $100,000, when am I going to start seeing cash flow? What's my total return going to be?
So you would get $2,000 a quarter because you're getting 8% return divided by 4 quarters. And whenever you call us and say, hey, I want my money back, or if we say, hey, we're at a point where we want to pay you your money back, you'll get paid 8% through the last day we have your money. And then you'll get a K1, a tax form that says you got a capital gain at the end of your investment, and you'll be on your way.
Okay, got it. So what money are you going to use to pay me back?
So it's a combination of, we will use construction debt. Once we finalize the docs, the bank will gross up the loan such that the equity we contributed about 30 to 35% of the total cost.
Mm-hmm.
So we're already past that now, and so we'll have equity cash coming back to us. And we'll also expect to make home sale profits, both on the single family lots and on the manufactured houses. So there'll be profits coming in from sales. We can also use that money to pay investors back.
Okay, so let's clarify the redeemability of this investment. So when can I request to get my money back? And also, are you allowed to just pay me back?
Yes and yes. So
okay.
We're asking for a 6-month commitment, that like you can't take your money back in the first 6 months. After that, you give us a call. We have 90 days to pay you back. Could very well be sooner than that, but we want to make sure we're not stressed or scrambling. And then if we feel like we're in a point where we no longer need this equity investment, we are able to pay it back and give investors our 8% through the day of our redemption.
Okay. Last one, I'm going to ask the question and answer it. So the question is, what happens if we're not able to secure construction loans and we're not paying investors back? We don't anticipate that to happen, but what we are doing is we are saying if you've requested your capital back and we have not paid it back by year 3, then your equity convert to common equity and you become a common equity investor in this project, entitled to upside and with all the attendant risks. I think that's a fair overview. Anything else to add? You're kind of from an FAQ perspective.
The only other part of that is that if we sell the property, like we don't get construction, we sell it as a type of property, the preferred equity would stand ahead of the common equity. So
Right.
you still have that seniority in your investment.
Yes,
Yeah,
right.
and
They get paid first.
That's right.
Right. So here we talk through some of the risk factors that are inherent in this real estate investment and almost any real estate investment. You should take some time to read this. You know, it's development, it depends on economic conditions. You're relying on us as managers. There are risks inherent in any project like this. And finally, let's talk through how to invest. As you mentioned, it's only open to accredited investors. Our minimum investment is $50,000, and we're looking for commitments by November 10th. Your entire investment amount is due within, I think, 3 days of your commitment. So we're not calling it over time, we're calling out your cash up front. And there's a link there for how to express your interest in investing. And I think that's it. So with that, we just want to say thank you. Appreciate you taking the time to watch this webinar. If you have any other questions, please email investorrelations@threepillarcommunities.com, and we would be happy to answer any questions. Thank you.